Welcome to Let's Talk Global Business, the show in which we look at the economic and business trends connecting the world. I'm Sara Murray, Managing Director International at Conference Board, the member-led global think tank that delivers trusted insights for what's ahead. Today, we're diving into the cryptic universe of digital currencies. After all, digital money isn't just about convenience or innovation, it's becoming a new front in global power. To help us get to the bottom of this complex subject, I've asked two special experts to join me. From the US, we have Josh Lipsky, Chair International Economics at the Atlantic Council and the Senior Director of the Atlantic Council's Geoeconomics Forum. And from Europe, we have Maria Demertzis, Leader of the Economy, Strategy and Finance Centre at Conference Board Europe. Hello and welcome. So, Josh, Maria, will digital currencies rewrite global power? Josh, would you like to go first?
Well, I think they already are rewriting global power in ways that are hard to measure in real time, but we'll look back a few years from now and see what's happening. And we can go through all the different aspects of digital currency today and talk about the dimensions. But from a US perspective, the key driver is the future of the dollar from a technological perspective. And the issue here is, what form will the dollar take in the years to come? We understand in the US, and we'll go through it, that they won't have a retail central bank digital currency, but we are, from the US perspective, leaning into dollar-backed stablecoins. And this has enormous implications for how countries around the world will use the dollar. It also has implications for how dollars flow between banks and between people, and includes the way we use the dollar in terms of national security to enforce our sanctions policy. So all of these things are changing in real time right now. And I think the dollar and money more from a broader perspective will look very different when we check back in on this, hopefully in a few years.
Thank you. Maria, anything you'd like to add?
I'm going to maybe take a slightly contrarian view just for the sake of the discussion. I think global power is defined by currencies, not so much the form that they take, which, digital is just a currency in a specific form. Now, what it does do, the digital availability of a currency, is that it makes the currency more accessible, but it doesn't make it necessarily better or worse. It's just the currency is what it is, good, bad, or for whatever reason we think a currency is good or bad. But it doesn't really mean that it becomes a better currency because it is digitally available. In fact, I would argue that because anything that is provided digitally is quicker available, we are not as quick to understand risks that may be involved by having a currency. So I would even argue that, on balance, the digital provision of currency may entail more risks that are visible to the eye. And so I would argue that it is the currencies themselves, and to the extent that there are movements in currencies, and I'm sure we get to that.
Okay, so let's start with the basics. So what are we talking about? Maria, what exactly are CBDCs? Could you give us a brief explanation for the listener?
Yeah, okay. So there are two types of digital currencies that we tend to think of, and your question is about one of them, which is the central bank digital currency. The other one is crypto, and I hope Josh can tell us a little bit more about that. The central bank digital currency is, you need to think of it as currency that is provided by the central bank. That's the cash. So effectively, central bank digital currency are digital cash. One of the arguments, and I can talk here about a little bit the euro area, where it's quite advanced in thinking about providing a digital euro, a euro area digital central bank currency. The idea is that we are moving into a world where we do more and more things digitally, including our payments. And then the question that the European Central Bank asked is, well, if we don't have cash, simply because we are moving into a digital world, are we not losing an anchor? Because cash typically acts like an anchor to the economy. When everything else fails, we still have cash. Well, if cash is not available because we become more digital, should we not think about having digital cash? That was very much the first motivation behind the digital euro, the thinking of the European Central Bank in thinking about the digital currency for the euro area. There are other motives for thinking about it, and we could come a little bit more to it. Josh and I have written about the relevance in a geopolitical sense, but I think originally the motivation is, certainly in this part of the world, we need a digital equivalent of cash. That would be the digital euro.
Okay. Josh, how does this differ from cryptocurrencies? And then why should businesses and consumers care about the differences?
Yes, it's very important to draw out the distinctions between what we're talking about here when we talk about digital currency. So, cryptocurrency, where most people have talked about this and thought about this and interacted with this traditionally, like Bitcoin, this is really something built on blockchain technology that is unpegged to any fiat currency, be it the dollar, the euro, or unpegged to anything that's more stable, like gold, for example. So it really fluctuates based on different forms of value. It can be based on scarcity, like Bitcoin is, because there's a very limited amount, or other ways there's supply and demand in different cryptocurrencies. We see in the US the rise of meme coins, for example, like the president might tweet about the Trump coin, and then that shoots up in value because people want it, and then it comes down in value. But all of these are hugely volatile because they're unpegged to anything that's a fiat. Now there's also something called stable coins, which use the same technology as cryptocurrency, blockchain technology, but their value is pegged one to something by their name, by definition, more stable. 98% of all stable coins are pegged to the US dollar. Some are pegged to a basket of currencies or commodities. So there's basically three ways to think about digital currency in my mind. Cryptocurrency unpegged, like Bitcoin. Cryptocurrency pegged, which is a stable coin, and central bank digital currency, as Maria just outlined. If you think about those three buckets, doesn't cover everything, but covers a lot of the digital currency universe.
Okay, thank you for that. So if we think about law, trust, infrastructure, when looking at international trade, Maria, what's the central bank's role in international payments?
Okay, so that brings us into a slightly different issue, and but we should bring it back to the digital currencies. The any central bank will provide a service called the settlement service. Yeah. So if there is, let's say, two people in the euro area that trade with each other, that transaction to be legitimate, meaning that money leaves one account and goes into the other, for that transaction to be final, the central bank comes in between and actually settles this transaction. It is effectively the legal way of ensuring that when money leaves the bank, then that person who is the owner of that bank account doesn't have a claim on it, but somebody else now has a claim on that. That's called the settlement. When trade happens in a currency, no matter what currency that is, it will be the central bank of that currency that will provide the settlement. Yeah. So if there is trade done in dollars, and in fact, 80% of all financial flows in the world currently are happening in dollars, any transaction that is provided in dollars will have to be settled by US authorities. And that is actually the settlement function of the central bank is crucial in enabling trade. And I'll give you a very clear example. When the Russia invaded Ukraine and Europeans continued to buy fuel, gas and oil from Russia, the contracts were in euros, so the buyers had to pay in euros. However, because of the sanctioning of the Russian authorities, the Russian authorities didn't have access to those euros, simply because in order for them to have access to it, they would have to go to the European Central Bank, which does the settlement. But the European Central Bank cannot settle a transaction if one of the two sides of the transaction are in sanctions. So effectively, the Russian authorities lost access not only to the euros but also to all the currencies that of the constituencies that had imposed the sanctions of the US and the G7 countries. So the settlement function is a crucial function in trade. And up till now, it is really the big currencies, primarily the dollar and the euro, and actually the dollar more than anything else, that have provided that function in terms of enabling trade.
Josh, talk me through the role that trust plays in the legal system if we think about it with regards to defining a currency's credibility.
Well, trust is everything. And we've just come out of the IMF World Bank meetings where the role of the dollar, more broadly, just not on digital currency, but as Maria was talking about, the role of the dollar as a global reserve currency was really being debated over the course of the week. And the number one thing you hear from currency experts, and Geeta Gopinath, who's the first deputy managing director of the IMF, has written about this extensively, is that rule of law is what's behind something becoming a reserve currency. But another way to say that is trust, meaning trust that there's a way to litigate something if you have a dispute, There's a process. You understand what the rules of the road are. You understand how you deal with something. For example, as Maria was just talking about settlement, sometimes there's mistakes in settlement. It happens between commercial banks. Sometimes it happens between central banks, but there's ways to resolve those disputes. You need to understand that it will be handled orderly in a process and fairly and equitably. And that is what undermines the entire system of why people have come to the US and the dollar over now close to a century to be the reserve currency. So trust is the backbone of everything. Rule of law, a system, a process, a belief in a judicial system that can litigate disputes when they happen, and a more broad conception of trust that says this is a country I want to invest in because I believe in its future and I believe that it will deal with me fairly, even if I sometimes disagree with it.
Okay, if we move on just to global trends, where do we stand globally? Which countries are furthest ahead?
It depends on what. If it is in terms of crypto, well, I mean, so the bitcoins and stable coins. Well, on the crypto, I think the US is the country that actually has the biggest use of crypto. Certainly, it's the second generation, which is the stable coins that Josh talked about. But when it comes to central bank digital currencies, then the US is not ahead in this. It is other jurisdictions. I would say that, and that includes China. China is on the test phase of the digital equivalent of their yuan. But there are countries around the world that actually do have operational CBDCs. And they are typically countries who have opted to create a digital equivalent of their cash because of financial inclusion reasons. There are countries in Africa, countries in the Caribbean that have, I would say, significant financial inclusion problems, meaning that not everybody's banked. And therefore, if you're not banked, you're excluded from digital payments. And therefore, they have been the ones that have been the first, actually, if I'm not wrong, to adopt CBDCs. And here I'm looking at Josh because Josh has a wonderful tracker of at the Geoeconomic Center of the level of development of CBDCs. Tell me, Josh, is there any other countries that have advanced on this apart
Yeah,
from?
no, you outlined it very well, Maria. And there's 134 countries in some phase of CBDC exploration around the world, but a lot of that is just research. But 44 countries are in pilot. So it's a significant number of countries which are now in pilot. This includes wholesale and retail pilots, which we can discuss. So some about user transactions, how I buy a cup of coffee, some really about how banks transfer money between themselves. But the Euro area, where you are, Maria, and you know well because you study this, is very advanced comparatively to most economies, moving forward on their pilot and research project. I think the digital euro is an extremely important project for the standard setting it can show around the world. And as you said, China's project, ECNY, there are 200 million users of ECNY right now. So even though it's a pilot, because not everyone in China can use it, that's a pretty big pilot when you think about 200 million users. There's an e-rupee project in India that's very significant, that's scaling up very quickly. So a lot of emerging markets and some advanced economies are further ahead. And as you said, the US is really nowhere in the retail central bank digital currency game, as we can talk about.
And can I add to something that Sarah,
Yeah.
certainly on the euro. So just on where we are, the European Commission, who is the legislative power in the context of the EU, has actually put forward a legislative proposal for what the digital euro should look like. That has not been discussed at the political level yet, but it should be discussing very soon. And once that is agreed, then it is the European Central Bank that will decide whether to go ahead with it or not. However, what I will say is that there seems to be a sense of urgency that is actually new by comparison to, say, 3 years ago when Josh, you and I were talking about these things. I think there is a level of urgency that is actually interesting, that is due entirely to kind of fragmentation, where there is a fear that we will not have our own sufficient, well-working and cheap, actually accessible means of payment, and therefore the digital euro will be necessary, will be a necessity more than a good to have. That is actually an interesting switch in the debate in Europe, even though we still haven't had the political debate. My sense is that there is a convergence now into the digital euro being much more of a reality by comparison to 2 years ago, which was like, okay, what is the value added of the digital euro?
Interesting. What do you see as the differences, so, in terms of like progress and challenges in Europe and the US, Maria?
Well, I think so, and Josh and I have really talked about this many times. The central bank digital currency has two uses. One is, as Josh said, for you and I to buy a coffee, that we call the retail use, and the other side is the wholesale, which is effectively for banks to transfer money between each other. Yeah. So the on the in Europe, we are working very hard on the retail. I know that the ECB is also working on the wholesale, which is effectively new technology to provide an old service, because wholesale CBDCs exist. It's just they don't use the same technology as the Bitcoin, but now they will with a distributed ledger. And the European Union, so via the ECB, is very well advanced on this. I think it is a question of just deciding and then implementing. On the wholesale, why they're working on it, they haven't been very forthcoming in terms of how how they see the benefits of it. But I will say that experiments that have been done on the wholesale show huge improvements by using the new technology. Now, the US has made little progress on the retail, but I'm sure that, and Josh can tell us more about this, on the wholesale, they're really thinking. Also because I think, given how popular the dollar is in terms of use in trade and financial flows, the dollar is the one that has the most to lose by having alternative settlement system, which is of course what the wholesale CBDC is all about.
Anything you want to add, Josh?
Yeah, so I can speak from the US perspective, and Maria's exactly right. So, the US and President Trump, when he came in January, said we are going to ban the research on a retail central bank digital currency. That makes the United States the only country to preemptively ban a central bank digital currency. Not every country will have a retail CBDC, but we have a preemptive ban on even exploring one inside the Federal Reserve here. Why is that? It's because CBDCs have become very political in the US. It was an issue in the presidential campaign. Now, as someone who has studied CBDCs for nearly a decade, I can't tell you how strange it is to see that issue come up in a presidential campaign. I never would have imagined when I was at the IMF that this payments system, this payments innovation, a central bank digital currency, would make its way into presidential politics. But here we are. And the reason is because it's got wrapped up in privacy debates in the US, and not only in the US. You see that around the world. I'm sure it'll be part of the political debate in Europe as it moves through the process. But it's become hyper politicized here in the US. And the argument has been that if the government has this tool, if it has a central bank digital currency, it could surveil your payment systems, and not only surveil your payments, it could control how you pay things. So it could say, well, we don't think this is the right policy priority. We don't think you should be paying for this X, Y, and Z climate related issue, for example, and we're going to restrict that payment. Just for example, how it could be used. And more broadly, the government would know how you're spending your money. Now, there are all kinds of protections that can be put in place on central bank digital currencies. Of course, most governments know how you spend your money if they go to your commercial banks now. If they have reason to be suspicious of illicit activity, there's a process for that in the United States. But this is how it's become part of the political debate. And that's why it's been preemptively banned from the retail side. The wholesale side's very different. And that's because, as Maria said, the US is very invested in making sure the dollar remains the backbone of the global economy going forward. The US wants to make sure sanctions can be enforced globally. That means they need banks to transact in dollars. And therefore, they want to lean in on this new technology to make sure transfers between banks, not transfers between people, but transfers between banks, remain at the best technology. And we use this distributed ledger. But in the US, we're not now really allowed to say CBDC anymore because it gets confused when we say wholesale CBDC and retail CBDC. So what we say now in the US, and I had a conversation with Chris Waller, who's a governor at the Federal Reserve who oversees this issue, is tokenized commercial bank deposits. This makes everyone feel less concerned that you're talking about a retail central bank digital currency when you're talking about a wholesale central bank digital currency. So hopefully that's helpful a little bit of where things stand from the US perspective right now.
The issue of privacy that Josh talked about was very much actually an issue in the EU as well. I mean, just to be clear, in fact, actually, in all the tests that the ECB did, this was a top concern when it comes to certainly from the consumer associations. And with that, I want to come back to the original point that you asked, Sarah, about trust, because if you don't trust that the ECB or any central bank is not going to use the information it has in ways that are controlling, then of course you get panicked. And so without trust, they will never be able to sort of this project to go through. And in fact, one of the big attempts that the ECB did was very much to explain the privacy is ensured, and in any case, the information that anybody has will not be different to the information right now that is available. If courts decide that there is something unlawful happened, they can always access it. Yeah, and that's an important thing. But trust is crucial here, and why the European Union has managed to something get through this issue of trust. The US didn't manage to penetrate and trust the institutions that they can actually use this information, not use this information in a way that is compatible with the governance system.
Interesting. If we just switch to cryptocurrency initiatives, Josh, what effects might the new administration's initiatives have?
Well, they're very significant. And this is what I was getting at in the first question you asked about the future of the dollar and geopolitics. So what the administration has done is said no retail CBDC, no Fed dollar, no Fed digital dollar, like the ECB may have a digital euro. But what we are leaning into in the US are dollar-backed stable coins. So as I said before, 98% of stable coins around the world are pegged to the dollar. Now, these are privately issued. Some of the big companies around the world, these are private companies that issue them. This is not a central bank. Now, they are supposed to, these companies, have at their disposal liquidity, meaning the backing up of that stable coin so they could redeem it at par. So I go to the company and say, hey, I want to cash out my $10,000 of stable coin. They can do it like that. But like all banks, we know there could also be a run, and there could be what we would call a depegging of the stablecoin. Could they not meet their requirements? That has happened from time to time in stablecoins. It happened when Silicon Valley Bank collapsed a year and a half ago. So we've been through that before, and we know what that looks like. But now the US is saying we actually have a form of a digital dollar. It's a dollar-backed stablecoins. And we want all these private issuers to continue to distribute them because from the Fed's perspective, this actually deepens dollar dominance. And I think this is important to understand how the Fed's thinking. The more stablecoins that are issued around the world, the more these companies have to buy treasuries to back up the stablecoin. So they have to hold dollars in some way, shape, or form to be able to redeem the stablecoin. And therefore, they see this as a way to increase the need for dollars around the world. And we see stablecoin usage every month increasing exponentially, not primarily in the US, but in emerging markets and developing economies, which makes sense because that's where the demand for dollar is so high. It's also expensive sometimes to access dollars in these countries. And stablecoin gives them cheaper and easier mechanism on their phones to access dollars. So all of this is where the US policy is going, and it has enormous ripple effects around the world because central bankers in other countries say, well, hold on a second. What about my monetary sovereignty? Maybe I don't want what they call digital dollarization of their economy. Dollarization is a longstanding phenomenon in macroeconomics, but now you have an accelerant of it through digital form. And central banks around the world are waking up to this US policy and saying, I'm not sure that I like that, and I may need to put up some walls in my own economy to prevent it. And that's really where we are from a US perspective on the stablecoin side.
But may I ask a question, Sarah, if you don't mind?
Yes, go for it.
This is something that it's important. So a foreign agent, non-US, I mean by that, a non-US financial institution somewhere issues a stable coin which is back to the dollar, and of course, it will, in order to issue that stable coin, it will need to have the reserves for the dollar. But where is this institution regulated?
Yes. Well, you're asking the key question, Maria. It depends. There are US stablecoin issuers like Circle, and there are non-US stablecoin issuers like Tether. It depends where they're domiciled and registered. Now, obviously, from a US perspective, they want these companies to be under US regulation because they want to have ways to monitor illicit finance, all kinds of AML-CFT issues. This becomes very difficult. Even if those companies are buying treasuries, we don't understand how the coin is being distributed around the world, especially if they're not registered and domiciled under US regulation. So there's a fractured regulatory landscape is how I would approach it. Some US, some non-US. And by the way, we have no regulation even on US issuers right now, although that probably will change within the next 2 months because there's legislation moving through Congress as we speak. But that will predominantly affect the US issuers of stablecoin, not those who are issuing stablecoins around the world. You could almost think of this, Maria, as an old Eurodollar situation going back to the 60s and 70s. Sometimes we would call it non-dollar dollars being issued around the world. And what is the regulatory framework around them? I think this is a major question over the years ahead to address.
Indeed. Thank you.
We're going to take a short break, and when we come back, we'll continue this discussion on digital currencies. Please note that you can find a host of content on the economic landscape on our website.
Join us at the Conference Board's Future Reward Europe, happening on the 5th and 6th of June in Brussels. Explore cutting-edge thinking on pay equity, AI and compensation, employee experience, and more, all through a global lens. Hear from top reward leaders and connect with peers shaping the future of work. Register now at conference-board.org/rewards. Get insights, get inspired, get connected.
Hello, welcome back to this conversation with Josh Lipsky and Maria Demertzis. We've been talking about the role of digital currencies. I want to turn the discussion to the future. So, how are digital currencies reshaping geopolitics, Maria?
Yeah, I mean, I think if I may just for a moment talk about central bank digital currencies, I think that, and then we can talk a little bit about crypto as well. It's interesting. Josh told us earlier on that there are now 44 countries, 44 central banks that are at the development phase or the test phase of central bank digital currencies. At the beginning of the war when Russia invaded Ukraine, that was almost 12, I think, Josh?
Almost a tripling.
Wow.
Exactly. So it's a tripling. And I think one of the reasons why this happened is actually the loss to the settlement access, right? Again, if you have to operate in dollars, then you need to use US institutions that are going to do the settlement. If you don't have access to them, then you're cut off. And in fact, central banks around the world were sort of thinking, oh, what if I'm next? So I think Josh alluded to this idea of sanctions enforcement. The US really wants people to use the world to use the dollars, because like that there is the possibility of sanctions, which is effectively a geopolitical tool, economic statecraft, I believe you call it, Josh. And in fact we saw that how effective that was vis-a-vis Russia. So central banks of the various countries around the world are preparing for the possibility that they may be next. They may be caught up in some dispute of geopolitical relevance and be cut off from the international system. What do they do there? And I think CBDCs are an alternative. Now, they're not in operation yet. There have been some trial runs and some tests run with it, but they're not fully in operation. In fact, the biggest problem for CBDCs to really take off and become a real credible alternative to the dollar and indeed the G7 currencies is governance. Under what law? Again, back to your trust issue, Sarah. Under what law will these currencies operate? So let's take two random central banks, Central Bank of Chile and Central Bank of India. They trade. What do they trade off? Well, under the current regime, mostly they trade in dollars. So therefore, they go through the settlement of the United States. If they want to use some other currency, they need to have a settlement infrastructure, which currently they don't. Yeah. And CBDC will be an alternative to that. But let's suppose for a moment it existed. Under which law will it operate? The Indian law or the Chilean law or some other, third country law? This is not an easy problem to solve, and in particular in the context of polarization and geopolitical rifts, this becomes an even bigger problem. And I give you an example of why this is the case. The institution that has been running all these experiments when it comes to the wholesale CBDCs, the Bank for International Settlements in Switzerland. The BIS is really the central bank of central banks, so, where all central banks converge to discuss about common issues. And they were the ones running all these tests. Just before Christmas, BIS left the biggest experiment that has been done on central bank digital currencies. It was something called M-Bridges, that they included countries like China and Saudi Arabia, I think. Josh, you know this better. But they left this program, and now they're running an alternative called Agora, I believe.
Why did they leave, Maria?
Well, okay, so what they say is that the program has come to its end. There was nothing else to be delivered. But if you allow me to speculate for a minute, and I'll be interested to hear Jose's speculation on this, I think this is a platform for settlements, and I think countries around the world, or what I would call of the Western Alliance, were maybe worried that this is a platform for evading sanctions. And therefore, the BIS could not be seen to participate in a platform, actively in a platform that evades sanctions. Now, I don't know this for a fact, but I wouldn't be surprised, given also the interest in developing these platforms. But that leaves us with a problem, because if you don't have the BIS in the center of this, that system will take a different direction, and we don't know what the direction might be.
Yeah. I can jump in there. So exactly right, Maria. Enbridge is one of the most important projects in the world right now. And the reason it is because it's taken the theoretical of what we're talking about here, cross-border payments at a wholesale level, and operationalized it, because Enbridge settles real value, not at large volumes, but real value, several hundreds of millions so far. And it's a 4-year-old program between the People's Bank of China, Hong Kong Monetary Authority, Thailand, the UAE, and the country that joined 6 months ago, Saudi Arabia, which certainly raised a lot of eyebrows here in the US, as you can imagine. We at the Geoeconomic Center since 2021 have raised the issues that Maria is talking about the possibility that Enbridge could be used for sanctions evasion, though I think the motivations are more complicated. There are multi-motivations here. One could be that. One is also faster cross-border payment and settlement, the traditional reasons you would want a wholesale CBDC. But what accelerated everything that happened over the past 6 months? At the Kazan summit, the BRICS summit 6 months ago in Russia, the Russian authorities said that Enbridge could be the building blocks for them to build BRICSbridge, basically a cross-border payments network between the BRICS countries. This sort of confirmed many of the suspicions that Maria and others have been talking about for years, because it brought very clearly a premise where the Enbridge protocol, which the BIS is involved in, could then be transferred in some way. That made it impossible for the BIS to stay involved in the Enbridge project, and so they removed themselves. But the project continues, just really under full People's Bank of China control now, with the other partners, I'd say more as junior partners in the program, and more countries will be added to Enbridge going forward. I was just in Hong Kong a few weeks ago. I think that's very clear. So this is a significant project because it settles money cross borders, large volumes, wholesale level, without the dollar, and it settles it near instantly. So it's a project to stay really on top of. But Agora is another project that continues through the BIS. And this is really a G7 approach to cross-border settlement, and the New York Fed's involved. But the truth is that they're years behind where Enbridge is technologically. So while it's good that the project is going on and it involves the Europeans and the Americans and the Japanese and the South Koreans and the Brits, that's the kind of alliance you want going forward as you think about the future of currency. They are really behind where Enbridge is. Of course, they have a lot of advantages because the dollar is the dollar, the euro is the euro, the pound is the pound. The currencies you want to use are part of it. So the Enbridge has a long way to go, not just because of the governance, as Maria said, but also the liquidity. What currency is going to backstop something like Enbridge? Is it renminbi? Are the Chinese going to release capital controls so you can really have the kind of flow you would need for Enbridge to be successful? These are the constraints over time to really build up an alternative to cross-border payments outside the dollar.
So if the Bank of International Settlement have kind of stepped out and you need that global organization to be able to govern, are there any other organizations that could take its place?
Well, everyone's trying right now. You know, the IMF wants to be involved, the BIS wants to be involved. So there's an alphabet soup of international financial organizations who say, well, hold on a second. Why can't we be the cross-border hub going forward? SWIFT is probably the most forward-leaning of these organizations. SWIFT, of course, a public-private cooperative that does cross-border messaging, the leading cross-border messaging service between banks, 11,000 banks under SWIFT. And SWIFT sees what's happening around the world, and they say, well, hold on a second. We are SWIFT, 50-year-old technology. If you were building the system from scratch, you actually want to separate out messaging and settlement. This is what China does, by the way. Their SIP system combines messaging and settlement. So maybe the future is messaging and settlement recombined into one platform, with central bank digital currencies as one avenue to do it, but other avenues as well would exist. And so SWIFT is trying to say, well, we want to be the hub of that going forward. They see how their business model is evolving, but it's undecided right now who, if anyone, will serve as the future cross-border coordinator for these kind of transactions. And I would say of the 134 countries exploring central bank digital currency, this is important, not a single one are built on the same tech stack completely. So think about the interoperability challenge we've created, because every country understandably has approached these things domestically. How would it work in my economy domestically? The afterthought has been the cross-border issue. Now it's becoming much more front and center on the agenda.
So really the global financial system is starting to split.
I'd say it's starting to fragment. I think that's fair. And it's not just about digital currency. It's about protectionism in the US. It's about what's happened around the world since the global financial crisis and the Eurozone crisis and the pandemic and supply chains. So digital currency is one factor and what I would call a fragmentation of the global economy.
And that brings us, of course, to de-dollarization, because I mean that the fragmentation is, I think, happening around the role of the dollar. I mean, if the dollar is retreating from being the global provider of liquidity and actually backing up all these currencies, can you really think of stable coins taking over when you have a currency that is actually retreating? So it's important to think about the role of the dollar as the international currency before we can even say something about digital currencies like cryptos and stablecoins. Stablecoins, particularly because they are based on the dollar, taking over. I think it will not be, and that comes back to your first question, Sarah. It will not, in my view, just maybe you may be different. It will not be the digital provision of a currency that dominates.
No,
it can act as an accelerator because the digital format is facilitating, but it is the value of the currency backed by the trust on the system that will provide that dominance, that the power that you talked about. And that's the reason why currencies like the yuan or the e-yuan cannot take over, because first of all they're not traded, and the Chinese do not see themselves as providing an international currency that actually has the responsibility of making the system work by providing liquidity when liquidity is needed. You see, and the question is, if the dollar goes, what takes its place?
Yeah, the key question, right? And there isn't an answer right now. If we just move to like risks, regulations, business implications, what does the EU's introduction of MiCA mean for the future of digital currencies in Europe?
If I may, so the MiCA is the regulator, for the benefit of our audiences who are listening to us. MiCA is the regulation that the European Union has put in place to effectively regulate the wallets, the exchanges. So, if you want to trade in digital coins, and by that we mean bitcoins, yet cryptocurrencies, you need to be registered with a wallet, a digital wallet, an exchange, and that is regulated.
Yeah.
So that you can monitor the age of the people that are participating, and to effectively make sure that there isn't also illicit trading going on. Now, MiCA is about to be superimposed on national law. It hasn't really yet. It will be in 2026. But by the time this happens, then the consumer is confident that they can participate in these exchanges if they want to. But there is also recourse, and this is back to the trust system. If something goes wrong, where do you go? Well, there is a legal recourse under the system in which particular exchange operates. That's what I think is crucial here. The US is working on it, and I think the current administration is thinking of putting regulation in place, right, Josh?
That's right. Yeah, there's two pieces of legislation. One is stablecoin regulation, and then one is a more crypto markets framework, which would be more similar to what MiCA is in the EU. The stablecoin legislation is more likely to pass in the coming months. The crypto markets framework looks further afield right now, given some of the debates going on. But everyone in the US has looked at the EU and said, well, if they can regulate, why can't we do it here? So there's actually bipartisan agreement that we need to, given the amount of crypto activity that's happening in the US. But as always, it's more difficult to actually decide what regulation should be in place than agree that you need to regulate. I do think we're going to get there in the next year. And I think it's going to be a pretty loose regime, meaning that unlike the EU, which is thinking about much more in terms of the risk side, the US administration and Congress are thinking much more of what they would call unleash the innovation side. Let crypto grow. We want the US to be a crypto hub. Of course, we need some provisos around that and guardrails, but I think it's going to be relatively loose compared to what we see in the EU from a regulatory standpoint.
Interesting. What do you think business leaders need to be aware of today, Maria?
Well, I think look, like with anything, to the extent that this CBDCs and crypto are used for payment systems, they need to be safe payment system. Otherwise, value is destroyed if these are not safe payment systems. Imagine if you all carry trade in bitcoins. The oscillation of the price in Bitcoin isn't really rendering itself amenable to trade transactions. Right? It's not a good payment system because the value of it is oscillating. Now, there are other things where I think Bitcoin has been interesting. The technology behind it has been really revolutionary. And in some particular instances, it has allowed access to trade that previously was not available. Even if you don't price your trade in bitcoins, you can still make the payment in trade if you don't have access to dollars or euros, and that enables trade. So not all is lost. It's just that it's important that if you are a business leader or if you're participating in the markets, you understand why is it that you're using a particular currency, so in particular in digital formats, and importantly, what insurance do you have? And I don't mean necessarily financial insurance, I actually mean law enforcement. You have that if something goes wrong, you know where you can go to try and dispute a settlement. I think that's a very important. So, important to use currencies and settlement systems that are established, that have got trustworthy institutional backgrounds to enable trade and financial flows. Otherwise, you might run risks of huge losses.
Josh, anything you want to add?
The biggest thing I would say is that be forward thinking from a business perspective. The future of money, how citizens interact with money, is going to look very different a decade from now than it does today. And I notice when I talk to business leaders, those who are thinking about ecosystems where people transfer crypto, stablecoin, maybe CBDC, and their commercial banking money between themselves seamlessly is really where I think the future is headed. Basically, a digital asset ecosystem interacting with the traditional financial system is what we're going to evolve to over the next decade. And what people really want, the demand signal I see, is ease of transfer between all the different options of money, of which there are going to be many more in the years ahead, not fewer. And so it's important for business leaders just to understand that direction of travel. It will look different in different countries, but I don't think we're going back. I think we're moving toward a more diversified payments landscape is how I would describe it.
Okay, thank you. As we wrap up this discussion, if you could give one more piece of advice to leaders coming out of this discussion, what would it be?
I think what Josh said is actually very important, that there will be alternatives around, and it's just a matter of understanding what they do and, find out what they are and use them. I think technology is a huge enabler, and I'm all for technological innovation. But it's important that as consumers, we understand the risks that this technology innovation entails. And, as part of being in Europe, we like regulation. We trust that regulation protects us. And I think that's also important to allow for regulation to run its course. And deliver on that security.
Well, I would say, trust arrives on foot and leaves on horseback is what I would remind everyone right now from a U.S. perspective, meaning that we have been the reserve currency for 100 years. That's been built up, hard won and hard fought. But we see things that can erode that trust, getting back to where you are at the beginning, Sarah, and the questions we talked about. And so it's important for everyone to understand, I believe the foundations are shifting. Doesn't mean the euro is going to become the reserve currency in a decade. I don't think we're at that place for a whole reasons we can discuss in another podcast, fiscal capacity and otherwise. But it does mean that countries, I do believe, are starting to look for alternatives in a way they haven't before. And we should respond to those demand signals and understand them, because they are really significant. And we could be undergoing a kind of financial change in the global economy that we have not experienced in decades. And I think it's important for everyone, business leaders and otherwise, to be aware of that. This is not a moment like we have lived through in recent history.
Yeah, be aware that the tectonic shifts are taking place as we speak. Indeed. Well, that brings us to the end of this episode of Let's Talk Global Business. We'll be back next time with a focus on a new topic. You can find a host of content on the economic landscape, as well as listen to the entire catalogue of podcast programming from the Conference Board by visiting our website, conference-board.org. Thank you, Maria and Josh, for sharing your insights with us. Until next time on Let's Talk Global Business.